So next we'll hear from Jean-Christophe Dumont from OECD.
Thank you. Good morning, everybody. I will give you through a few slides a snapshot of the recent trends in investors and entrepreneurs, well, mostly investor visa, in OECD countries. I must say from the beginning that the line between entrepreneurs and investors is not always easy to draw, because in investor programs sometimes you have requirements about job creation, for example, which implies that you have some entrepreneurial skills, or if I can explain it a bit differently, within an investor's visa you have some active and passive and investments which are possible. Active meaning taking part in the development of the project that you contribute to. I think it's more interesting to focus on investor visa for two reasons. One is that it's really the area where there is a lot of policy activity in OECD country. Many countries are changing or adopting new visas in this field. And second, entrepreneur visa have been fairly small in most countries over time. So I really believe that this is the most interesting trend on investors. As you can see from this slide, many OECD countries have such visas. In bold, the year when the program was introduced or changed, with the exception of the US, most of the changes have been fairly recent, or some of the programs have been introduced a long time ago, but changed regularly. And you have a variety of countries, and as I will point out in a minute, with very different underlying objectives for these programs. You have also a new, emerging interest on startup visas, with few examples so far. Chile being the first one. Very small program, but which has raised a lot of attention worldwide, because they not only grant the visa for startup, but they also give a small amount of money, of capital, to start the business, and also include people in business or startup incubator. So it's really a package. They really want to sell the Chile outside. It's a small number of people, but this program has a lot of visibility internationally. And obviously, we talked about that yesterday already. Canada doing introducing such a visa this year with the first two visas we were told yesterday, given recently. So also on these programs, the number are fairly small, but I can tell you the policy interest is very high. So what are the objectives? Actually, the objectives vary a lot across country and maybe within country sometimes. It's about economic transformation, job creation in some case, regional development. Some of these programs have specific regional dimensions, innovation and productivity, but also links to international markets. And I think this is the most important development recently, a strong focus on the housing market. Basically, we can group these programs in four categories. Let's start with business, employment, and innovation. You have here, it's not a closed list. You have here countries such as the US, Netherlands, Germany, France, Chile, Canada, but you could also put some of the other programs there as well. Well, the idea is that people will bring some funds, but will also commit to create some jobs. this is the case, for example, of a program that was introduced in France in 2009, where it's required to invest 10 million euros and to create at least 50 jobs. But this is also true for, let's say, the EB5 in the US, where you can invest 1 million or 500,000 if it's a targeted employment area, and where you also have the objective to create jobs. In the Netherlands, interestingly, the amount of money which is required is a bit less. It's 1.2 million euros, but people are selected through a point system. So the business skills and a certain number of criteria are assessed based on a point system weighted in a way. So it's again, not only about the amount of money that you are providing, but also your capacity to manage that money to create some economic benefits for the destination country. If I go to the investment capital, well, the idea is basically that you give your money in specific funds which are administrated by the country. Ireland is doing that with proposing that with a, well, actually, maybe it's better in a donation part because it's with 0 return rate on investment. So you invest 1 million euro, but get no return. Korea has such a program, and depending on, again, here it's very interesting. Depending on the amount of money that you will provide, $200,000, which is not a big amount, you get temporary visa, and you get 500,000, you get permanent visa. New Zealand has also a similar program, in Australia, obviously, very, very similar as always between the two countries. And depending on the business experience, you are allowed to invest more or less. Well, it's not allowed to invest, but if you can invest less if you have some business experience. It's 1.5 million New Zealand dollars if you have 3 years of business experience, 10 million if you don't have any. More or less the same thing in the case of Australia. So what is really new here, I think, is the two other ones, the donation and the properties. Donation, and well, it's not only donation, it's also about public investing in public bonds. In Spain, if you invest 2 million in Spanish bonds, you get the visa. And it's also true for Greece with a higher amount. But most of the recent developments are really on the property front. And it comes from Southern European countries where obviously the housing market has been hardly affected by the economic crisis. In Spain, if you invest €500,000 in properties, which doesn't sound like a so big amount, you get the visa, and if you stay long enough, you'll get permanent residency. In New Zealand, it's a variation. You need to contribute to housing development. So you cannot buy a house. You need to build a house, basically. And in Greece, there's a huge variation. But the lower figure is only 250,000. If you invest in housing, well, in building construction in the tourism sector. So it's not for your own use, but it's one of the lowest amount, 250. And basically, again, it gives you access to EU visa, Schengen visa, and permanent residency. So you can see from this very quick snapshot that actually behind these programs, There is a huge variety of parameters, of approaches, but a lot of activities. What we've seen, countries which have adopted first this sort of visa, including Australia, Canada, New Zealand, UK, you see changes in the condition, in the requirements, so adaptation of this visa. Understanding that they have not been very successful always, and there are compliance issue. I will come back to that. But this country have tried to adapt the set of criteria which are needed. And again, I mentioned Netherlands as being one of the countries where they have quite a complex system through a point-based system. There is one country which offers the possibility to come without any condition. This is Greece, but you should invest 100 million euros. So that's a no-condition program. If you have 100 million, whatever your age and experience, you get a permit. You see strong focus on labor market, but what you see is very few systematic evaluation of the programs. Well, it's generally true for migration policy in most countries, frankly, but it's a bit more striking on these programs because they are aimed at bringing economic benefits. That's their only raison d'être. So if you are not capable to evaluate these benefits, you can obviously, they can be easily challenged. There are very few evaluation. I think the MAC did something fairly unique in this area, and other countries are not very well aware of what is the impact of their investor programs. Again, the parameters vary a lot from one country to the other, and that makes comparison, international comparison, extremely difficult. The condition, what you gain from this program, all this is parameterized in very different ways across country, and frankly, it's extremely difficult to compare. But I'll try to show you two graphs, one on the minimum investment threshold and one on the benefit that you can get from this program in terms of access to permanent residence. And you'll see the huge variation. So this is the minimum amount of money that you need to invest in the country to get access to the program. Obviously, depending on the condition, sometimes you need to invest more. But for example, when I mentioned Greece, it was the minimum amount. In the case of the US, this is not exactly correct because if you invest in the targeted employment area, it's half that amount. So the US should more be between Korea and Ireland rather than where it stands in terms of minimal amount. So you see extremely large variation, and in some countries like Estonia, it's almost nothing. It's, I think, 16,000 only. But you need to have a business plan which is approved, and actually this program is not necessarily targeting Russians, so there's not so many people who are necessarily interested to go there, and it has not brought a lot of people. But you can see behind this variation in the numbers the very different approaches that countries take to this program. And now the condition to gain permanent residence. Again, some of them don't give any value added. You just have to stay the normal amount of year to get permanent residence. That's the case for France, for example. You have to invest 10 million euros, but basically you still have to wait 10 years to get permanent visa. But in some other countries, like in the US, it's fairly straightforward route. But in the US, for example, you have to still to pass, or you have still to have created at least 10 qualified jobs within the past 2 years. So there is an outcome expectation from the program, which is not the case necessarily for the others. If you look at New Zealand and Australia, for example, they have investor and super investor visa. Investor in New Zealand, and it's basically the same in Australia. Investor, you need to invest only 1.5 million New Zealand dollars, as I said. But you need to be in the country at least 140 days in the past 3 years, which is not full time, obviously, but quite significant. If you invest 10 million New Zealand dollars, then it's only 44 days within the past 3 years. So basically, you just take some vacation in New Zealand, and then that's good. After 2 years, yes, 3 years, you get permanent residency. So you see that what people can gain from that is also very different across country, and the condition to access permanent residence based on this program varies a lot. I just want to end with 2 slides. One, but what do people want when they go through this program? And I think there is a big mismatch between what is expected from the policy side and what is expected from the migrants who are going through this program, and very difficult to reconcile the two. Actually, we said Greece, 100 million. If I have 100 million euros, I don't need to live in Greece. I can live wherever. So do I really need that visa, and why? I think this is obviously a question. For migrants, immigration and investment are separate issues, and maybe the rationale for them is that they see that as one of the path of least resistance for immigration, if I may say so. Compared to other migration route, if I get the money, maybe that's for me the easiest way to enter. But it's not necessarily the investment which is driving the migration decision in a way, but more the other way around. And why these people would be interested to immigrate to one of the OECD country? It's mostly for reasons which, again, are not related to the expected economic benefit. More to the fact that it's safe destination. It's an insurance policy in terms of I get a foreign passport, I can move around more easily. I can give access to my children to tertiary education. And I might, in the case of Europe, have access to free visa regime, Schengen visa, and then I can move around more easily in Europe. So I'm not saying this is never the case, but I think that this mismatch is very difficult to reconcile. And at the end, there is a number of questions, challenges for the policy. One is with the public perception. I think that was said already yesterday, that sometimes these visas are seen as unfair, just give easier access for rich people. There are issues about the capacity of people in charge of a migration policy officer in managing these programs. So are immigration officers qualified to assess, plan, and monitor their successful implementation? I mean, that's a different job, right? Identifying the type of investment project representing potential net gain for the country. Again, from a border control or immigration officer perspective, this is not easy task. And in the case of startup, how to evaluate the likelihood that a startup has some potential. I mean, not all ideas will create Facebook or Twitter. So how to make the selection here, it's also difficult. But there are very difficult questions regarding the diligence of the investment source and the issue of money laundering. I think this is a big challenge for these programs. When you see where the migrants come from in these programs, you can sometimes see the risk. And obviously, I mean, the whole point of this program is about getting some economic benefits, but the cost benefit analysis is very difficult to do. Because obviously there are the costs which are associated to the program implementation themselves that should be taken into account. Again, we are talking about a very small number of visa. So if you have to mobilize maybe 10 people in your staff to do that, this has to be taken into account. There are some distributional impact, including on the housing market. And there are some externality, particularly in the EU, where when you grant a visa to someone on a permanent basis, obviously this person is free to move afterwards. So if one country is basically playing a little bit with that, what is the impact on the others? And you have to look at the, obviously, as always, creating a new migration route, what impact that might have, and that's obviously very difficult to do, on other routes. So are these people that would not have been able to come through other channels? Or, do you think that these people may have chosen this one because it's actually the most, the easiest one? So if you want to do this cost-benefit analysis, you probably have to answer to all these questions. I think these are remaining open questions for most of the country in that area. Thank you very much for your attention.